Hello guys, how are you? Thank you for joining us. My name is Lucy and I work at Janta Business Support, and we're so glad to host you today just to talk about cash flow and what it can do for your business. So the topic today, we're talking about cash flow and why is it more important than branding. I think the best place to start is to define what is cash flow. As you can tell, even just from the word, it's how is cash moving in and out of your business. So if you say, for example, you're selling goods and you have money coming in from every transaction, but then you're also paying out in terms of stock you're buying, in terms of the expenses you have in your business. So that's money leaving. So today we're not really talking too much about profit, although we'll touch on it a little bit. We're really talking about what is called liquidity. What is liquidity? Is actually having cash in the business to be able to buy stock, to be able to pay for expenses, to just be able to survive. And I think one of the biggest issues I see with a lot of our clients is you'll see on paper you're profitable, but you're cash broke. So what does that mean? It means, for example, you're making sales, yes, you have deals going on. Say, for example, you're selling a service, but your bank account is empty. But on paper, you're shown that you're profitable. Say, for example, you have deals, you're making, for example, per deal 3 million, 5 million, and you've done maybe 10 or 14 or 15 of those in the last 1 year. And so ideally, when you're looking at your profit and loss statement, it's showing that you should have maybe 14, 15 or 30 million in your account, but your account probably has 200,000. Or if your business is smaller and you are making sales of 2,000 shillings, 3,000 shillings or dollars, and you're meant to have, and you're looking at your bank account and you're like, I should have more money, then cash flow is a problem in your business. Now, on the other hand, branding is what a lot of us know what it is. It's making sure we have a beautiful logo, we have all these nice things that speak about our company, we have branded items that have our logo. People understand what they like when they look at your shop, or if they look at your social media handles. They're very clear what it is your business is selling, what it represents. I mean, the word brand just means, what do people feel, or what do they recognize when they see your brand. That means they could be seeing your logo, they could be seeing items that are branded in your name, etc. Why? It's an important part of business. However, when we're looking at the day-to-day running of business, if you had the option to either brand or make sure your cash flow is fine, we will say cash flow here is king. Now, when I say we need to take care of our cash flow, it means we're looking at several things. One, are we making enough cash to support our business? What does that mean? It means, are we pricing correctly? Number one, so are we making enough? So if an item, say for example, costs us $10 to buy, and we're selling it at $20, have we factored in the cost of buying it, which is $10, maybe cost of distribution, maybe cost of bringing it in? Are we factoring in the cost of the labor that we have? So what we call direct costs. Are we also factoring in indirect costs? For example, are we able to, if we sell enough of these items at $20, are we going to be able to pay for our electricity bills, our internet bills, our rent, all those other things that we need to take care of? Now, that's number two. Number two, we will want to see, are we selling enough? So the product could be there and it's at the right price, but we're not selling enough. That means we have not done enough cash flow projections to ensure that we are meeting we're meeting our target. So a lot of us, we create targets out of the blue. So we say, oh, I want to make such and such amount of money this month in terms of revenue, but we're not thinking about if we are, for example, let me give you a simple example, and we're going through this with one of our clients just the other day. If I need to meet expenses of say 20,000 USD per month for my business, then if I'm loading that cost into the price of my product, then and the price of my product is coming to, for example, 20 USD, that means I will need to sell 1,000 pieces to be able to meet my indirect cost. That we have factored in, yes, we have factored in profit, but I will need to at least sell 1,000 units so that I'm able to meet my indirect costs. And that is what should be informing your sales target. You shouldn't be coming up with a figure out of the blue, because if you come up with a figure out of the blue, then your cash will not make any sense. So if your cash flow is low, check if your price is right, check if you're meeting your sales target, and you've set the correct sales target that will cover all your costs, including profit. Number 3, we need to check your stock movement. Okay, so we're looking at if I have stock that I have bought, and say I gave myself a sales target of 1,000 units based on what I needed to make for my indirect costs, but I shipped in 3,000 units. Yes, I've sold 1,000 units. Next month I sold 500 units from the first shipment of stock, but I needed to buy another 3,000 units. Remember, as I go buying stock, the stock that is being left, how am I optimizing it? Am I making sure that I have the correct reorder levels? So I'm not making decisions on buying stock based on a whim. I'm not making a decision to say, oh, especially I see this a lot with people who sell clothing and apparel. Because you're going with style and the style changes, you continuously are buying new stock, many times on a whim, or based on thinking, oh, people are asking for this other item, I don't have it, so I need to restock. That means you're tying up a lot of cash in stock, and you're not making the right decisions. So if you have a lot of stock that you're not able to sell, then you made the wrong decision in terms of the quantity of every SKU you have. And I hope you understand what SKU is. For every SKU you have to understand how to buy the right number that you know you're able to sell quickly. So that's in terms of stock movement. So if your stock is not moving correctly, then you will have problems with cash flow. And if you're not able to get that data, please, as a matter of priority, get yourself a system. There are point of sale systems that should be able to handle inventory management as well. So a basic point of sale system should be able to handle your sales, should be able to handle inventory management, should be able to handle basic accounting. So if you're able to get a system that will able to give you some reports so that you're not making decisions on a whim, then you're able to have better control over the decisions you're making. Okay, that's number 3. So we've looked at 1, pricing. We've looked at sales targets. Number 3, we've looked at stock and how you're making decisions about stock. Now, if, for example, you sell a service and you don't have very strict collection policies. What does that mean? You have a contract with your client. They're supposed to pay you within 14 days, but 3 months later you're chasing your money. So on paper you're showing that you have money that is coming in, or your project has been recognized because you have invoiced it in the system, but you have not received the cash. This is a dangerous situation, because I have seen, in fact, earlier on at the time we were starting on, those are problems we really struggled with, where we were working with a lot of clients who yes, we're getting a lot of work. We're having clients giving us work. And because of that, we are hiring so that we're able to handle the size of the workload that we are receiving. So we're now incurring expenses to do a job or to do several jobs, but then we don't have very strict collection policies. And one of the ways we went about this is to first, we changed our contract to request for deposits, especially with new clients. With clients who are new, nowadays we ask for 30% deposit for things like recruitment. For other services, we ask even up to 60, because you're not sure this client is able to pay you and pay you on time. If it's an ongoing client and you kind of understand their payment cycles, then you can make a bit of leeway. But when it's a new client, make sure you have a deposit system so that you're ensuring that you have cash that has already come in. Don't do work without asking for a payment first. Number 2, ensure you have very strict collection policies. Everyone else is also trying to pay as late as possible. I will tell you this, we have a client who called us, and this is a large organization, very well known in the country, and they just all of a sudden decided, oh, we're extending our payment terms to 90 days. This is what we did as Janta. We halted all services because we are not going to do business. Remember, there's time value of money. So you're working with inflation, you're working with a lot of other issues. The longer you have to stay without paying some bills, the more you're going to incur interest. Say, for example, if you have debt also that you're servicing, if you don't pay on time, you're also going to incur interest. So those are things that you really must consider. So hold services and tell them, you don't assume you're the underdog. If you're good enough at what you do, then you need to be able to negotiate the payment terms so that you're not struggling with payments. So another thing you could do is give incentives for clients who are looking to save money. So for example, you could tell them, listen, if you pay us within 14 days, we'll give you a 20% discount, or we'll give you a 10% discount. Clients would rather pay less, so they may even be incentivized to pay you on time. And then now create but like in your cash management policies, and these are not cash management, these are credit management policies. The systems you have, ensure that they penalize the client for the longer they stay with your money. So if you have, say for example, 30 days policy for collection, ensure you give an incentive for 14 days payment. Then between 14 days and 30 days, that's okay, they can pay. But beyond 30 days, then now start charging interest on those payments, because you need to ensure that they know that they're supposed to pay you on time. This, I will tell you, is the biggest issue with a lot of clients, and especially in this market. People just don't pay on time, and you will do a lot of business, incur a lot of expenses without receiving cash. Cash is so important because you need to be able to pay your bills on time so that you're not incurring costs. Number 2, you need to be able to invest. Say for example, there's a new technology that you need to invest to make your business easier, or you need to invest in new stock, you need to invest in equipment. You're held back because you're not liquid, and then that affects your business. So that's why we're saying having cash is very, very critical, enough so that you're even able to brand. So it's important that you always are continuously thinking about how liquid am I. And if you actually have an accountant, it's important that they give you reports that make sense for you. So you don't just receive P&Ls. You also have to receive cash flow statements. You have to receive a balance sheet so that you know your position in terms of leverage, in terms of how much do I owe and how much money is owed to me. So it's ensure that you're actually educating yourself in the money side of your business so that you're not struggling with this situation often. So I think up to there, I hope everyone has understood. If you have any questions, please ask on any of our platforms. We are live on YouTube, we are live on Instagram, we are live on TikTok. So we are happy to have you. Ask your questions so that we are able to answer you. And even if we don't answer during the session, we are likely to answer you even after. So don't fear. So some of the questions we've already received. Maybe let me read out the first one. So this caller is asking, I launched with a lean model, minimal branding and solid budgets. Now I'm being advised to create a strong brand presence to scale, but that means spending more upfront. Can a business truly grow without ever investing heavily in branding, or is that a short-term cash flow trap waiting to happen? So I'm assuming if you're doing, this is someone who already has the cash flow, okay. So yes, if branding is needed to take you to the next level, invest in it. But the danger of investing in just branding is that you'll end up investing in a lot of things that don't necessarily bring money back. I like to look at marketing holistically. Branding is a critical part of marketing because branding affects how people perceive you. So everything around branding, for example, if you look at the Janta logo, if you look at it in depth, you will see that small little people around a circle, and for us it represents unity, it represents the Africanness of our brand, it represents innovation because of the colors that are in there, and we want people to feel a certain way when they're interacting with us. That's why we're doing things like that, because generally here we're not really interacting with our clients, but we want people to know us and we want people to understand what it is that we do. So that's why we will invest in the PR and the communication side of our business. So it is important to brand, it is important to do marketing. It's actually very critical to do marketing. So and I don't like separating them. Yes, it's a critical part and should be really taken care of, but I don't like separating marketing and branding. So yes, if you're at a point in your business where cash flow is fine and you're not struggling, invest in marketing. Definitely invest in marketing, but also do it conscientiously so that you know I am not just investing money in my brand being known, but I'm investing in the whole customer experience and how they're interacting with the logo, they're interacting with my name, how they're interacting with my services, how does a customer feel when they have purchased from me, how do they feel being associated with my brand, how many people know about me. I think, and that is even the more critical question. Do enough people know about your business so that to ensure that your revenue is still coming in? We're not saying branding is not important, we're saying it's very important, but you still really must take care of your cash flow. Alright, so I'll go to the next question. So someone is asking, clients love our work and we're fully booked, but we're always chasing payments and running on fumes. I'm so sorry. I've been told rebranding could help us attract higher paying clients. Should I invest in rebranding to reposition us or fix our cash flow systems first, even if the brand stays plain? So I want to address one or two things. We are fully booked, meaning we are not struggling to bring in the customer. I think fix your internal problems first. Don't run into now. In fact, if you're fully booked, then you market. That means we don't have systems to even handle the upsurge of clients. So I think the best thing is to fix why are the clients not paying you on time. Is it, first of all, you're doing a business that is purely on credit? I think credit is one of the most dangerous things in business. So I don't support it, but in some industries it's hard to work without it. So what you do is create a hybrid model. Ensure people pay. One of our favorite clients, and they know this, they do brows and lashes, and they get clients to pay a 50% deposit on booking. You've not even entered the premises and they're fully booked because their quality is so good, clients want to work with them anyway. So you have your client pay at least 50% off before they arrive. If they even don't turn up, you have the liberty to deduct part of it because you didn't take up another client. You understand? So, and then after that, on arrival, they pay the balance. there's absolutely no need to play with credit, especially if your industry is not so strict about it. So I think for that particular caller, just ensure that you have created credit management systems, so that you're able to handle, to manage your cash very well. Don't start looking for more clients until you fixed your cash position. So I think at this point we should be able to take a call, and please feel free to call us, or even DM us if you want to give us a call, but you can call us on 0726 061 607. That's if you're in Kenya. If you're not in Kenya, you'll need to add a +254 before that, so that you're able to talk to us during the show. But if you want to talk to us and you want to plan to talk to us in the next show, please just DM us in one of our social media platforms, and we will be happy to take your call. All right, so we're ready for one of our callers. I think Hi, Margaret, how are you?
I'm fine.
All right, so you had a question for us?
Yes, I had the question. How do I improve my cash flow without taking any debt?
Okay, maybe you'd need to give us maybe a bit more context in terms of the business and our current cash flow situation.
Okay, I'm in the beauty industry. I teach makeup. I also sell products.
Yes.
And I offer services.
And you offer services in the beauty industry?
In the beauty industry, yeah.
And what would...
bridals, model makeup.
Fantastic.
Research, yeah.
All right. And what's the name of your business, so that even our callers can reach out to you as well?
Peggy Makeup Studios. And we are located in CBD, Sasa Mall, and Lucy Wanyika.
Wow, great. So tell me, what would be the biggest challenge you're facing with cash flow?
It was a question I was asking. Sometimes you're scared of taking a loan. So I just wanted to see, is it something you should think of as a business?
Yeah.
Or, No,
I would not, first of all, I would not advise to invest in branding through loans.
Okay.
Because that's something that your business should be able to afford just from the cash flow.
Okay.
All right. Okay. But in terms of improving cash flow in itself, and I'm assuming you want to either bring in more cash, and retain more cash.
Yes.
Okay. So if you want to bring in more cash, you might want to invest in low-cost marketing tactics. So, for example, right now digital marketing is very easy, and you can actually do digital marketing without investing heavily in it, so long as you have first educated yourself on how to do it very well. And then if you're able to do a lot of content marketing that attracts the right customer, you'll find that you don't need to invest too much in it. So if you can bring in more customers and then reduce on your costs and your expenses, then you're able to retain more money in the business. So I think the first thing is ensure you're making way more money than you currently are. So for example, you could say in the next 3 months you want to increase your sales by 20 to 30%. Then you tell yourself, look at your costs and see, what is it am I spending on? Do you have a system or an accounting system that tracks your spending?
No.
Okay, I think that's the first place to start. Even if you're not able to afford an accountant at the moment, there are very low cost accounting systems that you could get, even that could operate from your phone, that will help you track your expenses. So if you're not able to track your expenses, then you have no ability to hold on to cash, because you're not even able to budget for the next month.
Okay, for the budget, I use the Excel.
Fair enough. But are you also putting on Excel every little thing that you're spending cash on?
Yes.
You are?
Yeah. I just use Excel, but I've not just gotten like a system that will just do that everything for me. So I just do it manually.
Okay.
I put in, just divide everything,
Okay.
what I'm making, the expenses, what I want, like that.
Okay.
What I'm paying, the makeup artists that are there.
Okay. Okay. So now, are you able to tell what percentage of profit you're making?
Okay, I'm not near my computer at the moment.
No, I'm just saying, do you know what it is? Do you know the percentage of net profit, what is gross profit? Because the danger, okay, let me maybe explain. The danger of only using Excel is unless you're an accountant yourself, because we are only advise accountants to use Excel. Because an accountant is able to create a sheet that will tell you, yes, we have money in the bank, but that money is not ours.
Yeah.
You get what I'm saying? So if you have money that is, say for example, you have 1 million Kenya shillings in your account, but that money could be for the next month's expenses. Or this money could be gross profit, or it could be net profit. So you don't know if you have enough money to now invest in other things, or if we have too little money, we need to cut down on expenses. You understand? We need to understand our cash movement to a point we know that of the 1 million shillings, 20% of it is costs of sales, 30% is indirect costs, 15% is net profit, maybe 30% is gross profit. Do you understand what I'm saying?
I get you.
So if you are able to do the same tracking on a low cost accounting system, or a low cost POS, for example, that maybe might cost you 300 shillings a month, then the system is able to do that math for you.
Yeah, I'm looking into getting that system.
I think look faster.
Yeah, I will.
As you're thinking about it, think faster, because you need to quickly make a decision.
Sorry?
You need to quickly make a decision and so that you're able to now see what money you actually have. It's very hard to manage cash flow without looking at money critically, because you really need to understand the cash that is in your account, what it is for. If it's not possible, maybe you could get an accountant, a low-cost accountant, who can look at your figures monthly, so that you're able to have a better understanding of how cash is moving in your business.
Okay.
And I think that for me would be the priority. The priority for me would be get an accountant or an accounting system. If you understand accounts well, get an accounting system, because Excel does not help you much. It will help you in terms of recording, yes, but yes, you could be recording even on a book, right? But are we making financial decisions based on the data we have?
Yeah.
You get what I'm saying? So I think it's very important to take care of our money using a professional, and if you can't get a professional, get an app that can help you, even if it's just to start.
Okay, sawa.
Sawa? Does that make sense to you, Margaret?
Yeah, it does. Thank you.
You're very welcome. Maybe do you have another question?
No, not for now.
Not for now. All right. Thank you very much for reaching out, Margaret.
Sawa.
All right. Unless you are willing to invest the time and effort it takes to understand a marketing strategy, on how to deliver a marketing strategy, get a professional to do it. Find someone at your level, perhaps, or whatever you can afford, but get a professional to do it, or get a professional to teach you. If it is accounts, and I feel this is so personal to me, because I've had personal experience where I was like, why should I care about numbers? Why is it important? When we were younger in business, and one day I got a call from the Revenue Authority asking me for a lot of money, because I just didn't want to invest in accounting. If you are in business, take care of your money. I think one of the questions I even had earlier is how much reserve should a small business have? You should be able, as the way we say for individuals, you should be able to survive for 3 months if you were to lose your job. Same for business, you should be able to operate for at least 3 to 6 months should you not make any revenue when in the coming months. So make sure you have enough, take care of your money, take care of your cash flow, and have the right person taking care of it. If you're not an accountant, you're a quack when it comes to taking care of your money. So get a professional to take care of your money. The same way you will not treat yourself when you're sick, that to a point where you can't start feeling a certain way and then you say, okay, I'll go to the chemist and buy this, unless you already know what is wrong with you. But if you've never seen a doctor for that condition, and then you're not going to go to the chemist and ask for drugs, you're going to go see a doctor. And if you'd likely go to the chemist for something you don't know, you very likely end up in hospital anyway, So it's the same thing for your money. Ensure it's being taken care of by a professional, and if not, at least get an app that can help you with accounting. So as you prepare for the next caller, I will just pick one of the next questions that I had here. My business just got featured in a popular magazine and our Instagram blew up. Congratulations. We're getting tons of inquiries, but conversions are still low. Meanwhile, I'm dipping into my savings to stay afloat. At what point does visibility stop being valuable if it doesn't immediately lead to cash flow? First of all, stop. Just stop where you are, breathe. If you're getting visibility and you're not converting it into sales, it says, 1, you're speaking to the wrong people. 2, the people you're talking to are not looking to buy. 3, they're seeing you, but you're not converting it into sales. So what does that mean? You could be saying this is what we do, or you're not communicating that you're able to sell to that particular individual. But likely, and this is something I've seen even with a lot of our clients, is likely you're not talking to the right people. So you find it's either you're on social media and when you post things, people are asking about price, they're complaining about the price of what you're selling. You're likely not speaking to the right people. So you need to really evaluate your marketing strategy and the audience you're talking to. So evaluate that, then figure out where you're going wrong, and then hold off until you figure out the cash issue. I would not spend from the pocket. I advise not to spend from the pocket unless, 1, you're starting the business, or 2, you're looking to expand. If you have to get money from the business to pay for your operating expenses, there's something wrong and you really need to get professional advice. I think we would be ready for the next call. Remember guys, if you want to make a call to us, or if you want to ask us questions, please just DM us, or even just comment on the live below.
Hello.
Hi Jonathan, how are you?
I'm great. How are you doing?
Very well. Karibu sana.
Thank you.
All right. So you had a question?
Yes, I do.
Yes.
So my business is in the built environment space. I'm an engineering contractor.
Yes.
And quite a huge chunk of our upload comes from private sector and
yes.
also government.
Yes.
So my question would be, how do you mitigate against the risk of delayed payments?
Yeah.
Especially when it comes to dealing with government. As you know, government usually sets up their budget and then they go about looking for their revenue taxes.
Yes.
So sometimes part of the risk involves getting into engagements or contracts.
Yes.
Perhaps with even borrowed money.
Yes.
Of which you start incurring the cost of the finance
immediately. Yeah.
Against a fixed budget by the government.
Yes.
In most cases, you have to really maintain your bid at a low level, seeing as you have to
win
operate
it
in a very competitive environment.
Yes.
Whereby a slight variation and you're seen to be off the budget, you might just end up losing the contract.
That's true.
So how do you mitigate against such environments, and so that you keep afloat and ensure that your cash flows are maintained at par?
Okay. And I think another thing perhaps you might not even have mentioned, the cost of doing business with government is quite high. So even in terms of even your net profit from the contract is quite low, because there's all these other unmentionable costs that we're not going to discuss. But
Correct.
so I think for me, the thing we will need to quickly do is really reduce how much we're relying on government contracts. So you need to get a balance of who you're selling to, okay? And I know it's difficult because especially businesses in construction tend to be structured in a way that they are compliant with government contracts.
That's right.
But if we have over-reliance on government alone, you will quickly run into cash flow issues, right?
Okay.
So I'm sure this is something that you're already experiencing, so I will go straight to it. So what I would quickly do if I were you is I would structure the business to get revenue from other sources of income. So you already told me you do private sector and you do government. Now, how have you structured your services? Are we only doing construction or are we also doing maintenance contracts?
Yeah, it's actually both of those.
Yeah.
There's constructions where we do EPC,
yes.
The engineering bits and procurement and construction.
Yes.
And then there's also the maintenance, which is the post-construction works.
Yeah.
When it comes to private sector, there's really a bottleneck in terms of that revenue, that aspect of revenue collection. In that, most people, most of our target market would not necessarily go for a contractor when they're putting up their structures.
Yes.
As you would know, most people preferably just get a fundi and start bringing their materials and putting up their houses.
Yeah.
So that's the major issue when it comes to private sector per se.
Yeah.
So we would perhaps need some support in terms of how to address that.
Yeah.
I don't know, some sort of marketing support or whatever the case may be.
Yes, that's probably what you would need to do. But also the private sector is large in terms of who you are targeting. So the people you are talking about are probably what we call retail, the retail market, where you're selling B2C. We're selling to individuals or to small organizations, isn't it? They're the ones who would prefer working with a fundi. But the larger organizations, hello? I think we've probably dropped off, and I think I'll just continue answering the question because I know he will listen. So the thing, how you need to structure your business is so that you're not heavily reliant on one particular type of client, is you want to spread your risk. Spread it to a point where you have money coming in from very different directions, and this is something we have had to do as well. We were heavily relying on large corporates, and large corporates will take you to the dogs. They're like government. They can stay with your money 90 days or 20 days, and they're unmoved because everyone is trying to do business with them. So if you're in this situation and you're working with government and you're working with the private sector, what I would advise him to do first of all diversify to larger corporates, then perhaps look into the NGO market, because NGOs are not so bad with payment. They can take a bit of time, but they're not so bad with payments. And someone in the construction industry, 90 days, 120 days is not too bad. Problem with government is they can take 5 years. So diversify. Then look at what it is that you could sell that is lower cost, because you see we tend to chase the bigger deals and we forget the low-hanging fruit services that we could offer. If you have a team in construction, they're able to do maintenance contracts. Malls will need maintenance contracts. People companies that they own the buildings they're in will have maintenance contracts. They're not going to get a funding. So just look at the market holistically. Then you see for government, for large corporates, you're doing direct selling, so that is easy. But then for this other kind of contracts, you might need to hire a sales guy to actually get you this business. And then now you probably will need to invest in a bit of marketing. But marketing for this particular type of business is not the same. So social media will not do much for you, for example. However, you probably need a very good website. You need to have your SEO done. Ensure your visibility is very good, and then ensure that you have email marketing. The formal traditional marketing will work for this particular individual. So I would say, please try and avoid relying heavily on one client. We know, I think one of the Kenyan companies I can remember. If you are old enough, you know one of the first and biggest what are they called? They were called Kencom. They used to handle Safaricom, Airtel, sorry. Then it was Cancel. They used to handle their customer care. So it was one of the first and biggest call centers, and they closed because Celtel was doing, I think, 60% of their business. So by the time that client was pulling out, they were not able to handle, because you already have so many people who are on your payroll, you have big facilities, the equipment you have is a lot, maybe some you got through debt. It's not going to be sustainable if you have so much business coming from one channel. Even so, even if you're doing business with government, try and figure out, because we have county business in Kenya, so try and spread your risk. Don't just deal with roads alone, and don't just deal with the state alone. You could do county, although right now it's very, very risky business because money is just not moving in government. So I would heavily say diversify as quickly as possible. Try and see low-hanging fruit, small cash cow business that is going to help you pay the bills as you wait for the bigger deals to come through. I mean, I'm happy to have a conversation with you after this, Jonathan. I'm looking forward to helping you get out of this, and we're here to support you guys. If you have any questions, please ensure you call us on the number that is provided, DM us, and we are happy to support you. So just in terms of closing, just to close this conversation, take care of your money. Ensure you're receiving enough money. That means you're hitting your sales target. You're collecting on time. I think this is the most critical, especially for businesses in Africa. Collect on time, because people don't like paying on time. So ensure you have very strict credit policies. Don't do business with people who don't respect your money. Don't do business with people who are not willing to pay you on time. Get yourself a credit management policy, and you have to have credit management systems. If you don't collect within a stipulated period, hire a debt collector. These companies are popping up everywhere. Don't let your money just lie with clients. And if you're those kind of clients who don't pay on time, I mean, negotiate time, the amount of time you want to pay your client, and then pay them when it is agreed. I think this is just an appeal from most entrepreneurs out there. So I hope that you have learned how to manage your money. Ensure your stock is moving correctly. If you have dead stock, this is going to be a huge cash flow issue. Ensure that you're not borrowing for everything. Don't borrow for expenses. Don't borrow for small things. The only time you should be relying on debt is during expansion, and when you're very clear how your money is moving. So I hope this conversation helps you, has helped someone today. But we're really happy to have you, and we're going to see you next week with the next topic. Have a good evening ahead, or have a good afternoon ahead. Thank you.